Hey Finance Fam, welcome back to my channel. I'm really excited about this video because I have the beautiful, talented, smart Richelle with me, and she is going to give you guys so much information today. So what we're going to get into today is we are going to be talking about the questions that you should be asking your lender whenever you are trying to buy a home. The reason that we wanted to do this video is because we were actually we kind of get together and have finance conversations for fun. I mean, I don't know, we're kind of weird. Yeah. Well, actually, let me start. Why don't you go ahead and intro yourself to the audience, and who are you, what do you do, and yeah.
My name is Richelle Willett, and I'm a loan officer at Fairway Independent Mortgage Company. I got started in this industry because, well, I started as an entrepreneur and had an event production company, started making money from that, realized I needed to start investing that, and was super interested in real estate. So that was kind of my vehicle to start investing my own capital. And over time realized I was really passionate about this, wanted to learn more about it. And so becoming certified as a loan officer and entering the mortgage industry really seemed like the best way for me to continue to learn and build relationships with investors and really provide this holistic education for people with real estate as part of their wealth portfolio.
That's awesome. And I've actually mentioned to you before, I feel like you're in a way like the financial planner meets lender, you know, like you're really looking out for whoever you're working with, and you kind of take it maybe a step further than others might. If that's correct?
Definitely. Okay. I think it's easy to say that any lender will sell you debt. That's their job, and they get paid very well to do that. But I really, like you said, I like to take that big picture look at your finances, not just this one purchase, but how does that play into your whole portfolio, or, you know, this one leading to the next one, that kind of thing, and really offering a lot of financial advice with the loan that I'm also giving them.
I love that. You know, I'm a huge fan of that. So, so yeah, basically we both are big finance nerds. So how about that? We have, let's talk really quickly. I started to go into this earlier, but I was getting ahead of myself. So why did we want to do this video? Like, why are we here? You know, because we were talking and we realized how many people don't have a clue really when they're dealing with lenders. Their realtors basically will send them to their lenders or whoever they're working with. If they're buying a new home, usually there's the lender that they're dealing with through the builder. But they send them there, and the lender's like, okay, let's do this, this, and this, and this, and give me this paperwork, and blah, 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 blah. And people just kind of go with the flow and do it, and they go along with it. You know, they may not be thinking, hey, I should interview different lenders. I don't have to go with this lender. I can go with this lender if I want to. Who's getting me the best rate? You know? So that's why we wanted to do this video, to help you guys out when you're going to buy a home. And another thing we're going to kind of touch on, which we've talked about in depth, is making that decision of buying a home versus renting a home. It can, like, this I just did a video on this. It didn't used to be so complicated, right? Like, buying a home was the American dream. Absolutely. But that isn't necessarily the case anymore when you compare some of these crazy, outrageous home prices in certain big cities that most people want to live in. When you're comparing that to what you could rent and the money you can save in some of these big cities,
wild. Yeah,
it's like half the cost to rent. So we're gonna get into that, but and then there's areas where it makes more sense to buy.
For sure.
So we're gonna cover that in a little bit more detail. But yeah, I mean, that's why we're doing this video. So with that said, is there anything you want to add before we get into going over the buying versus renting?
I think let's jump right into it. Okay. Yeah, I'm excited.
All right. So these are our handles, by the way, right here. If you want to find us on the interwebs, on the socials. Okay. So this is an example that I pulled from Zillow literally this past week. So this is very fresh. Austin, Texas has been one of the craziest cities of housing appreciation over the past, I don't know, 10 years.
20 years, yeah.
So we thought this was a good example because we both live, you know, in the city. We're not too far from downtown. And we thought this was a great example because to rent in this area is so much cheaper than buying. And when you buy here, this is a $1.6 million home. The mortgage on this is over $900 a month estimated, assuming 20% down, right? So this is quite a hefty mortgage payment to be in the heart of downtown in a really hot area. This is a very sought after area. And if you look at the square footage, because I want you to see how we're going to compare this to the next option, which would be renting. So this is a 2,600 square foot, 3-bed, 3-bath. Now, take a look at that 900 number one more time before I switch to the next slide, because
9,000. Let's make sure.
Sorry, 9,000. Sorry.
I wish it was 900.
Thank
I'd
you.
move in right now.
No, $9,000 a month estimated mortgage. Now, to rent the equivalent home literally saves you $5,000 a month. Like, seriously? This is a no-brainer. You know, like, $5,000 disparity is a huge number. And this house to rent is literally 1 block away. It's super, super close. So this is what I thought to be a very good example of the difference between buying and renting in a really hot, really expensive city. It obviously makes more sense to rent in this case.
Oh, absolutely. And I think this is such a good example because this is, like you're saying, this is a really hot neighborhood. And I think we got into this conversation because I was mentioning I was looking at homes to rent or buy in this area and really was blown away at how much more affordable the rents were in this space. And I think it really drives it home when these numbers, especially, we're talking half as much money, $5,000 a month difference that you can do a lot with.
You can do a lot with $5,000. Yeah. And guys, I know that this is a over $1 million home, over $1.5 million home that we're using to compare, but it doesn't matter because it still drives home the same point. Like, this is a 3-bed, 3-bath, 2,500 square foot, right? Like, that's not a mansion, right? That's a pretty average home for someone with a few kids. And, so I thought it was a good example. And, you get people that are like, oh, well, of course, it's over $1 million, but $4,200 to rent it, that's not that absurd in today's world.
It's really not.
A $3,000 mortgage is not, or a $3,000 rent is not that absurd in many bigger cities.
It's really not. And to live, I think we'll get a little bit more into this, but to live this close to downtown in a walkable, beautiful neighborhood for, $4,000 a month, $3,000 a month, which I think is very achievable to find, is significantly cheaper. And when you're considering sort of short-term versus long-term basis, also, you're probably not going to live in that home your entire life. It's something that maybe makes sense when you're a little bit younger.
Yeah.
You want to be closer to the downtown vibe. And so thinking about that and the money that you're investing in a home as well, I think is really important to consider when you're looking at the cost overall.
Absolutely. And I know that you had mentioned in our last conversation, you had a friend or you knew someone that lived downtown paying, the cheaper rents, and they were thinking about moving to the suburbs to buy a $1 million home, which would have doubled their mortgage.
It's crazy to me. It doesn't make sense. They live in a beautiful building right now with a full concierge service. There's a bartender on the rooftop patio.
Yeah.
And they want to move to a much larger home that is going to double their payment. They're going to have more housing costs as far as maintenance, utilities, those kinds of things. And their commute is like a 10x commute from what it would be right now.
And granted, there are some people that just want to have their own space and they want to make it their own space. But when you look at the economics of it, if you're doubling what you're paying to live, you have to think, well, what's the opportunity cost of that?
Absolutely.
Where else can you put that money? You can invest it elsewhere. So it's more than just, I just want to own a home.
Right.
It's like, well, let's really think about this for a second.
Right.
So,
and I think that's the biggest point we were trying to make here is really taking the emotion out of it. It's so easy for this to be a very emotional decision, especially if you're thinking about your future and maybe where you're going to live with a partner or a family and raise children, where you want your kids to go to school. Obviously, all of those things are involved in shopping for a home. and it's not that they don't need to be, it's just that the finances and the numbers need to be as strong of a consideration when you're looking at these things, and not just ignore all of the costs associated with homeownership.
And I even just remembered, I said they were going to move out to the suburbs, but it wasn't even the suburbs. It was like literally, a mile or two away.
Westlake, so a few miles, down the road.
It wasn't that far away, so the suburbs would have probably made more sense, because you would get a mansion out there for $1 million, you know. But if you're only moving a little bit further down and you're not getting that much more square footage and you're doubling your housing costs, it's like, okay, think about this. So moving on, when does it make more sense to buy over renting? And it does, in many cities, make more sense to buy over rent. So, you know, this definitely is not like a one-trick pony situation. This is an example of a home on the outskirts of Houston, in a very popular, I would call it a popular suburb area, Katy, Texas. And this home is $285,000. It's 2,700 square feet, pretty big, four bed, 3 bath. The mortgage on this is estimated, with 20% down, to be around $1,700. I believe the estimated interest rate was 4% on both of these examples, actually, to touch on that. So this is pretty decent, you know. This is a nice house. Now, why this makes more sense to buy in this area is because, renting renting a comparable home is actually going to cost you more than what the mortgage would be. So in this case, the mortgage was around $1,700, and renting a pretty equivalent home, it has a little bit more square footage, but it was like the closest we could find, $2,500. So it's definitely, in that case, if you plan on being in your home for a while, it makes a lot more sense here to purchase your home. So, you know, I think that pretty much
for sure
drives the point home that it depends on your location. Location.
That's what they say.
Yeah. You know, it totally depends on where you are.
Yep.
So take that into account. It depends on, you know, what your goals are, what your cash flow is, how much money you have in the bank, because owning a home can get expensive.
Very expensive. I saw a stat recently or I guess a quote talking about the majority of credit card debt that American consumers have is either from medical expenses or a home expense that they didn't expect. And I think that's the thing. Your HVAC goes out and you're $5,000. And if you don't have that money in the bank to prepare for that kind of thing, that'll wipe you out. That'll make a big difference in what your cash flow situation looks like, and what you can afford for your other expenses every month.
And I do know a lot of people that they focus on saving enough for a down payment, and they save up everything for a down. You must see this all the time. They save up everything they have for a down payment. They take the down payment and they buy a home,
and they're so excited.
They're so excited, but they're left with nothing. And that is crushing in a way, because you don't want something to happen and they're charging their credit cards.
Absolutely.
And they're paying 20% interest or 17% interest on these credit cards. And that's where it can get a little sticky. So now that we're into expenses, we might as well we talked about this, and I talked about this in my prior video too, how a lot of people don't think about the expenses of buying a home the way they maybe should. And of course, some people do, but really, we just wanted to touch on all of these points. You've got your down payment, you've got closing costs. Now, with closing costs, do you have any tips for people on maybe how to reduce closing costs, or to get the other party to help them out? Tips
That's
there?
a big one. Yeah. So definitely seeing if the other party will help them out, if the seller will cover some of those costs. That's pretty common. It depends on whether or not it's a buyer or seller market. So that's going to depend on, the overall economy, the city you're in, et cetera. But I don't think it hurts to ask, and that's something that you could potentially negotiate, especially after you're under contract and in the option period. You might have a home inspection and see that there's some things that maybe you'd want repaired. Often sellers aren't really willing to make those repairs if they're moving out of the home. So one of the things you can do is ask them to cover some of those closing costs up front. And those can easily be 2 or 3% of the loan. So it's pretty significant if you're talking, a high dollar amount there.
Absolutely.
And absolutely worth asking. You're trying to negotiate that with the seller for sure. And then otherwise, even if they're not willing to cover some of those expenses, when your loan officer discloses your loan estimate to you up front, you'll see a breakdown on there of things that you can shop for. So there's some items on there that you can look into and potentially pick a different vendor if you feel like you can get a little bit better rate than what you're being offered by your lender.
What would some of those things be?
Well, let's
like
look
homeowners
at them.
insurance?
Absolutely. I think that's a huge one. People, and I sort of made this mistake when I was first purchasing a home. I just called the provider that covers my car insurance, and I was like, oh, for sure they'll have the best rate. And they quoted me, I think it was like $1,400 a month, and I ended up a couple weeks later calling around and just double checking that rate, and I found a rate closer to about $1,000. $1,400 a year, so $1,000 a year. So maybe not a ginormous expense, but it is $1,000 versus $1,400, so $400 difference.
Absolutely.
And also because you're paying prepaid costs up front when you're purchasing the loan, that would just be more that I would have to come up with up front if we had to include that as well.
So yeah, I think that's a great tip. Shop around. I mean, we shop around for cars. We shop around for the type of home we're going to buy. You know, we shop around when we're trying to buy something at a discount online. Why not shop around for your homeowner's insurance, and what are some other things that people might be able to shop around for?
Well, one of the other ones I was going to ask, homeowners insurance, but also mortgage insurance. So there's things that you can shop for, but there's things that your lender can shop for as well. So I have the opportunity to pull quotes from probably 10 different mortgage insurance companies. It would be easy for me to take the first one, like good,
Boom, done.
rock and roll, we're good in there. So that would definitely be on your list of questions to ask your lender.
There we go.
Ask them if they price that out for multiple vendors. I've seen a pretty big variation in what that can be, up to, $30 or $40 a month, which again, it's easy to say that's not much money, but over time, that is a pretty significant expense. And really, also, I think the type of lender that you'd want to be working with, hopefully they have your back and are making sure that you're getting the best deal.
You would hope, but
Ideally.
We don't really know.
Yeah.
you know? I mean, who really knows?
Right.
Unless the lender is explicitly talking with their client and saying, hey, I'm working with you. I'm trying to get you the best deal.
Totally.
You don't really know, right?
Yeah.
So,
and I think that coming back to sort of what we initially talked about as well, of like, what questions do you ask your lender? How do you know, how do you make that decision? Obviously, you want to rate shop and make sure that you're getting a good interest rate, a good private mortgage insurance rate, those kinds of things. But I also think about that relationship and the type of trust and how much advice and expertise they're offering you to make sure that they really do have your back and all of that. Because any old person can give you debt, but you want someone who's on your team and really going to help you build your financial wealth.
I just think we need more of this in this space. Like, that's why I love you so much, because I think that this is so important, and more people need to be thinking like this.
Absolutely.
So, well, that's great. I mean, that gets us right into the other questions that I was going to ask you about, like, basically credit. Let's talk credit real quick, because I think a lot of people out there, they either don't know what kind of credit they need, and they don't know how to achieve the rate or the credit rating that they need.
Yep.
There are things they can do to get there.
Definitely.
So let's talk a little bit about that.
Yeah. So I would definitely recommend people, if you have a little bit of time, if you're planning maybe a 6-month timeline to purchase, pull your credit yourself. You can do that on annualcreditreport.com for free. There's also other websites that allow you to do that with a credit score if you're interested in seeing that as well. But definitely take a look up front and see if there's anything on there that's hurting you. It will be on there as derogatory accounts, so it's pretty clear to see what are late payments, what are collections. You would probably know if you had a bankruptcy or foreclosure.
I would hope.
I hope that you do. But but the late payments and such, all the time I talk to people that had no idea that something happened, or they thought, it's a shared account and their mom has the account and didn't pay something on time, and so it's hurting them. There are things that you can do, and you can dispute most of those kinds of things to get your credit score up.
Yes.
And typically we want to see at least a 700 credit score to be able to give you good interest rates, and we'll be able to offer the best rates at about 740 and above. So that's really the goal that we're trying to get people to. And again, if people have a little bit of time, I like to help them and coach them a little bit on what they can do to improve their credit score, because it can be as much as 0.25% or 0.5% interest rate that we can offer between like a 690 and a 740. Tons of money over time that we're talking about on the mortgage.
Yeah, that's a whole nother conversation.
Yeah, easily.
Interest. And to touch on that point, like interest that you're paying on a home over the 30-year, and I say 30-year because that's what most people get. How often do you see people get 15-year fixed?
Almost never.
Okay, that's what I thought.
Yeah.
So everyone wants the lowest payment. They're getting 30 years. So someone commented on a video about how I didn't bring up the 15-year, and obviously there are reasons when you should choose the 15-year if your circumstances allow it.
For sure.
But unfortunately, most people, they just want the lowest payment.
30-year.
But with that, you are literally paying almost 100% of the price over time. You know, like in my example, a $300,000 home over 30 years, you end up paying over $500,000 for it. And I think that is not something most people think about. So, hey, like, it's fine. Like, you had to borrow, you had to borrow money, and it's fine. But just know that that's an expense whenever you're calculating whatever your profit is. So back to the credit real quick. I kind of went off on a tangent, but I actually had a scenario where something happened to me and I didn't know that there was a late on mine. And I was furious because I have, I take care of my business
with your,
but I was like, they're never going to reverse it. And I got them to reverse it. And it was just literally, I contacted them directly and I just told them the situation, and they had sent something to the wrong address and I never got it, and sure enough they completely removed it and I didn't have to deal with it again.
Absolutely.
So it is possible to negotiate with these people depending on whatever the situation may be, especially if they send a notice to the wrong address. You may be able to do something about that very easily.
There are so many laws that protect consumers with credit, and I think when we talk about wanting to empower people to make a difference in their life, this is the kind of thing that I hope to empower people to do, to recognize that they can do something about it. And really all it takes is a phone call, or maybe 10 phone calls. Sometimes you might have to harass a little bit.
Sometimes you have to go through a few customer representatives, and you'll
eventually for a manager.
You'll eventually get one that'll do it.
But they can do something about it, and that's the point, really. You can make a difference on that, and not to just let it be, oh, well, that's too bad, that'll come off on my credit, in 7 years from now. But to take action on those kinds of things, for sure.
So basically, when you're working with people, if you see that there's an opportunity for them to kind of wait a few months longer and get that score up, you'll be like, hey, listen, we may not get the best rate right now. Let's wait 2-3 months and we'll revisit it. Here's what you can do to improve it, and we'll go from there.
For sure. And if they're in really bad condition, I have, people on my team as well that are credit experts, and I can refer them to them. And occasionally this can be taken care of pretty quickly. So if someone applies and let's say they're on more of a 30 to 45 day timeline, we can still look at that, see what needs to be done. And if they're willing to take that action quickly, we can force what's called a rescore. And we would potentially just wait to lock their interest rate in until we have that new credit score. So again, it's possible to do it pretty quickly and make a difference in your payment.
So don't necessarily settle for that higher rate, essentially, is what we're getting at. Okay. Good to know. So what are some more questions that you feel that people should be asking their lenders whenever they sit down?
Definitely the breakdown. We kind of talked about, some of these things. So knowing what interest is, knowing property taxes. I would want to know where they source their property taxes. Occasionally people probably just put in maybe an average there, but property taxes are very property specific. So you want to make sure that they're entering the right numbers in there, because that'll make a big difference on what your payment is. You want to know how many months in prepaids they're escrowing. That can range from 2 to 12 months, and you want to make sure that they are not forcing you to pay more upfront than you need to, especially if you do have a buffer in your savings account like we talked about. I would like to know I offer this, and I think that people should definitely ask for this if they're looking to buy, but ask for a comparison between if you put, say, 5, 10, and 20% down. It's really helpful, I think, to see those options side by side to see if your interest rate varies, because it will. Your mortgage insurance will vary based on those numbers. And then, of course, the monthly payment will vary based on what you're putting down. And sometimes if you're thinking big picture and long term, it might be only a $70 difference a month between 5% down and 20% down, but 40, 50, 60K that you could hold on to if you put the lower down payment. And again, the opportunity cost of what you can do with 50 or 60K in other investment vehicles is really significant.
Yes, thank you. Thank you. Someone that understands me.
I speak the language.
No, that's it. You know, I think that's a great tip.
Yep.
And more so for the fact of thinking about the other things that you can be doing with that money. If it's not going to budge if it's not going to budge much and make that much of a difference in your cash flow or your life, definitely think about taking that money and saving it or investing it elsewhere, you know, whatever.
Absolutely.
There's an opportunity cost to everything. And
for sure.
I think that can be lost sometimes, that idea.
Yeah. I think actually with that, it's interesting. We're asking like what questions you can ask your lender, but I think it's also important to like what questions can you ask yourself or should you be asking yourself when you're purchasing a home, which obviously ties back to the rent versus buy comparison. But also it's funny to me, one of the most frequently asked questions I get when people initially, you know, initiate a conversation with me is how much can I afford? And of course I can plug in all the numbers and tell them what the bank is going to say that they're qualified for on the loan. But I want you as a purchaser to have a pretty good idea of what you're comfortable with as far as a monthly payment before you're coming to me and asking me for that information. That says to me, you know, if you know where you are and what you're comfortable with, and even if that's a range, it doesn't have to be a fixed number.
Yeah.
But if you have an idea of what your monthly budget looks like, how much you can afford to spend, what you're comfortable maintaining in the bank for maintenance and unexpected repairs, and then come and say, hey, this is kind of what we're looking for. Do we qualify? I feel much more comfortable working with you and helping you get a loan. And obviously it can be sort of a two-way street and a dialogue, and I'm going to help you no matter what. But I think that the more qualified buyers are the ones that are asking themselves the questions first. And again, looking at their full financial picture before just jumping into this emotional decision of like, I want this perfect house.
Exactly. Now I'm going to ask you a question.
Okay.
I hate to put you on the spot, but what percentage of people that you work with come to you knowing what they can afford? They've already thought about it versus people coming to you asking, what can I afford?
Almost no one.
Like, which one is
really,
the no one?
Almost no one knows what they can afford.
Okay.
I've had a couple people recently that were sort of finance nerds, probably like you and I, that came with spreadsheets, and I was so excited that
awesome.
You know they already are thinking about some of those things, and they had built out a little bit of their monthly budget. They understood the difference between their gross and net income, and a little bit about DTI and the things that we're looking at as a lender.
DTI is debt to income
ratio. Yeah. So the amount of debt that you carry, your liabilities, the monthly expenses portion of those versus your monthly income.
Exactly.
And that's very exciting to me because this particular buyer that I'm thinking of, we could then look at, you know, what really makes sense with their budget, their longer term goals. He just moved in with his girlfriend, so he's talking about sharing some of those expenses and what they can then potentially save in addition to what they're saving money because they're sharing living expenses, what they can save there. And then we went through his application process, and we know that he's qualified up to about $500,000, but then can have the conversation, okay, that's great, but that's your $3,600 a month payment or whatever, some roughly that. What could you do if we get you closer to the $2,500 a month payment that we originally talked about on your budget? And again, what can you do with that extra $1,000 a month that you have in the bank? And I think, again, that holistic sort of conversation about all of this is super important.
Yeah, I mean, in the financial planning world, it's that's what planners are doing. Mm-hmm. They're kind of doing all that work and then sending them to a lender. Like,
well, and I'd like to send them back to you. So
but I do love the idea of more lenders kind of thinking more so in that way. And,
well, and I think ultimately too, the people who are the most financially savvy, literate, successful people that I know have a team of experts, right? Which will include a financial planner, a lender, a realtor.
Yep.
You know, all of those things are super important. Banker, you know, all of those things are really, really important to have, and people who are on your team.
Teamwork makes the dream work.
Absolutely. And I think, again, that's for me, like, I want to work with people who are also interested in working with a financial planner, but who are also maybe going to come back as investors in the next couple of years. And we could just continue to build, right? And everybody wins from that, which is really exciting.
Yeah. Actually, that's a good parlay into a question that I have. Do you have any tips for investors that are trying to get a mortgage to do some, on the side investing?
Yeah.
Or do you work with a lot of people that are trying to do that? I know you're an investor yourself.
For sure.
So you are in that world.
Yes. I would say real estate is rarely an on-the-side investment, especially when you start. It's very hands-on. Yeah. And I've been there, done that, and learned a lot, and it's been a great experience, honestly.
I'd love to hear more about that.
Renovating things. Lots of tears in my driveway when I first bought my house.
Well, you know, we actually went through renovating a home as well, and it was a disaster. I don't even.
It can be. But I do think it's the same upfront. I'm probably going to tell you the same kinds of things. And as an investor and a lender, I love having these conversations and sitting down with people and looking at the numbers. But it's going to come down to the same thing. Look at the numbers and where the numbers make sense. Make sure that you're thoroughly considering every single expense that could possibly come up, especially as an investor. And it's the same situation. We don't want to max out, great, you saved this 20% down payment. Yeah. I don't want that to be every penny that you're going to spend, because anything and everything could and will go wrong with the home when you have it. And we've all heard the horror stories, right?
Yeah.
So I think it's just making sure that the numbers make sense. And I think you and I also talked about this one time, but one of the phrases that I really like is live where you want to live and invest where the numbers make sense. So really have an eye on, you know, one, the sort of more fun side of where you want to live and what you want your lifestyle to look like, but then how do your investments, whether that's real estate or other forms of your portfolio, how does that impact your lifestyle? And, you know, if you're not willing to be a property manager, do you need to hire a property manager and then consider that expense?
Yep. How is that going to mess with your margins, basically?
Absolutely.
Yep. Okay. Now, what about any tips for self-employed people getting a loan?
Stop writing buying everything a house off.
Well,
yeah.
I can't. No. On the financial planning side of that, I'm like, ugh.
No, it's tricky. I think it just involves a plan, and again, I think it can be a team approach, which I think is the most important part of it. So if you are self-employed and looking to purchase a home, whether you're looking at a primary residence or an investment property, perfect opportunity to link up your financial planner and your lender and say, hey, what can we do? What makes sense? You know, we're coming towards the end of the year, probably thinking about your 2019 taxes at this point. So maybe there's some things we can do to get a little bit creative and make sure that we are still maximizing write-offs, because obviously
maximizing taxes while still being able to qualify for a loan.
Exactly.
It may be knowing kind of the limitations of where we need to be with income or something like that.
Exactly.
Okay.
Exactly.
So having an idea, basically you got to know what you can afford and then kind of go from there. Like, okay, if I can afford $2,000 a month, I need X amount of income to be able to get a loan to qualify for that amount.
Absolutely.
So, yeah, it sounds like with self-employed, it just takes more planning.
It does. And sometimes we typically need a little bit longer history of self-employment. Usually 2 years. Occasionally we can get an exception for 1 year. And I think kind of with that, good things to know are that we're going to need some compensating factors. So we're going to want to see a really high credit score, lots of assets in the bank, that kind of thing that would sort of offset the risk that a lender would be looking at when taking that loan on.
Okay.
So that applies to everyone, but especially self-employed borrowers.
Self-employed, yeah. The struggle is real on that
really
side.
Is. Same. And honestly, that's one of the reasons I got into this as a self-employed person, applying for loans and not being able to get them, and was so confused.
It's infuriating.
It's like, I make the amount of money that this house costs. I don't understand why I can't purchase it. But I'm learning there's also products available that were never shown to me that are really great tools for investors. Things like bank statement loans or cash flow loans that are not Fannie Mae or Freddie Mac backed, but are really good options if you are a very serious investor and know how to kind of work the numbers and figure out what works for you.
Gotcha. Okay. I think that's all good stuff.
Yeah.
I mean, we kind of touched on your style as a lender, right? Your style is somewhat of a, you're like a holistic.
Yeah, a holistic healer.
A healer. Holistic money healer.
That's a brand.
I love it. I love your approachability. Like, I love just the way you think about it all.
Thank you.
You think about it like a financial planner thinks about it.
That's my goal, yeah.
That's what I love. So, I mean, that kind of covers that. We can kind of touch on these and then we'll, kind of wrap it up here. But basically, when you are looking at the expense of buying a home, down payment, like you mentioned, the tip about kind of getting a comparison of how the payment changes with how much you put down, really decide if it's worth taking that capital and putting it there,
exactly.
Or if there's a better place for that capital to go. maybe you need an emergency fund. Maybe you need to invest in retirement a little bit more. So less down payment might work better for you, depending. Closing costs. Now, is it possible to like come to the closing table and people get completely surprised with their closing costs, or is that pretty much like you're set on that once you get in there, you know what it's going to be?
No, I'm concerned if someone was totally surprised. Once you've completed an application, per federal compliance, a lender is required to disclose the loan within 3 days of receiving that application. So up front, right when you first start the process, you're under contract and ready to purchase a home, you receive a loan estimate that does outline all of those closing costs. So some of those may change between when you start and when you finish, but you also receive a closing disclosure at the very end of the process, 3 days before you close, that will show you that final amount. So even if there's some slight
So there might be some slight adjustments when you get that final disclosure, but hopefully nothing too shocking.
Yeah.
Okay, good to know. Minor repairs, if you have to paint the walls when you move in, moving expenses, interest on your loan, that's obviously a big one. We've been fortunate that we've kind of been in this state of perpetually low interest rates. So it's been awesome. I anticipate that to continue for the time being. Hopefully. So that's where I'm at on that. Homeowners insurance, shop it.
Definitely.
You might be able to find it a little bit cheaper. Every penny counts. Don't just go with whatever they give you.
Right.
And with that said, with homeowners insurance, make sure you're getting enough homeowners insurance, because I've heard some stories of people that their homeowners insurance wasn't enough. You have to have it a certain amount of the replacement value of the home. So make sure you're getting enough homeowners insurance, and make sure you're getting riders to cover. This is a side note. Sorry, I'm going off on a tangent. Make sure you're getting riders to cover expensive things like jewelry. Your homeowner's insurance doesn't necessarily cover 100% of your super expensive personal property, so that's just kind of a side note.
Also, since we're going on that side note,
let's do it.
Well, making sure that you have the right type of home insurance. So if you're purchasing an investment property, you'll have a dwelling insurance policy, which is different than a homeowner's insurance policy.
Yes.
You probably get it through the same vendor, but they're slightly different and slightly different coverage. And I've seen people make a mistake of moving out of their primary residence and deciding to rent it out, which I think is a great investment move, but then not changing that insurance. And then if something happens with the tenant and the insurance company finds out that it was a tenant and not you living there,
they will not
completely void your coverage.
Yeah, they will not be happy about that. So back to it. Property taxes. One area of town may be different than another. It may be going one town over saves you thousands of dollars, especially in a lot of cities in Texas, especially Austin, right?
Yep, totally.
So keep that in mind and make sure that you can afford the property taxes, because it's an expense in addition to your actual interest and your principal that you're buying in the home, and you're always going to pay it.
Forever.
You can pay your mortgage off 100% and you will still be paying property taxes. So be aware, just know what's around.
And as property values go up, so do your property taxes.
Exactly. It's a variable expense, so it will change. Mortgage insurance, we kind of touched on that too. And we touched on the opportunity costs of taking cash and dumping it into a house. So I think that's an important thing for people to kind of be aware of.
It's very illiquid.
Very.
And you have to, if you want it back, you have to pay interest for it. So definitely good to know.
We're back.
Compare your numbers there.
And then we were talking about, to kind of finish it up, some intrinsic costs of buying a home. We were talking about how if you're buying a home and you have to commute 30 miles and you're used to commuting less, that's gas. That's wear and tear on the car.
Time. I just think of time in a car and the cost of my time. I don't want to live that far away from where I work.
So that's definitely something to think about.
And then also just stress, I think, of homeownership, which it's again, I think it's because it's an emotional decision. People get excited about I can paint the walls the color that I want and decorate how I want and have all this freedom to make these changes in the home. But you also have to think of, you are responsible for every single thing that goes wrong. You have to do lawn maintenance and pest control and all these things you may not have ever considered or budgeted
Which it adds
for.
up.
Exactly.
It adds up.
If you've been a renter, and it really adds up. There were a lot of expenses when I first purchased that kind of surprised me that I honestly wasn't expecting.
What were some? Just to...
Pest control. That was such a silly one, but that is one. And then honestly, lawn care, where I had this high and mighty idea that I would want to mow my own lawn. I don't want to mow my own lawn. So I need to have someone else can do that.
Funny.
And then like clean out the gutters and rake the leaf, all of those things.
Yeah.
Just things to consider versus, if you live in an apartment building, all of those things just are magically taken care of and you don't even realize that they cost money.
The light goes out.
You just call someone and they take care of it. Yeah. So those kinds of things I think important to consider.
And we're not trashing homeownership because you're a homeowner.
I'm a homeowner. Happy homeowner.
Exactly.
Yes.
And you're an investor. Like you're doing the thing. It's just, we want people to be, I want people, and I think we both feel the same. We want people to just be aware and be more educated about this before they get into it.
Stay woke.
Stay woke. Yes. That's so good. That's some millennial speak right there.
right.
Well, I mean, I think that unless there's anything else that you can think of that any last words for people that you want them to know, anything that you want to touch on before we close up?
I don't think so. I'm sure there's so much more we could talk about. But really, ultimately, know your numbers, find professionals that you trust, build a team of people who are going to be with you long term and have your best financial interest in mind. And I think that's, part of both of our value system is offering that to people. Yeah. For sure. So just feel empowered and know that you have the opportunity to take those steps and take that action.
I love it. And you can actually get a hold of either of us. Yeah. This is our information here, our handles on the Instagram. I know mine is also YouTube and Twitter. Yours is Instagram. And then those are our websites. So if you have any questions about getting a loan, Richelle, you work with people all over.
We can do loans all over the country. Yeah.
Well, then that's awesome. Yep. So if you have any questions about loans or you're interested in getting a loan, here's your girl.
Hit me up.
All right.
Awesome.
Well, thank you for joining us.
Thank you. This is so great.
Thank you for joining me.
All of our friends. Yes.
All right. Well, awesome. We'll probably be getting together again and having another one of these. I have a feeling.
So. Awesome.
All right. Thanks, guys. See you later.